It was a pretty quiet day on Wall Street all the way up until about the last half an hour of trading, where we did see a surge into the close. We ended up finishing higher by 0.8% on the S&P 500, closing basically at session highs, as this market remains undeterred by all of the chaos around it, whether it's the looting and protests and riots, or whether back to our old news stories revolving around COVID-19 and what that means to the economy. So right now, stock market continues into an uptrend. However, I did spot a stock that is kind of standing out to me as a potential bearish candidate. It's in a fairly strong sector, but this stock itself has not hit a new high since back in April. So I want to focus on a bearish trade in tonight's trade example. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 2nd, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe while you're over there. Check out our description area and sign up for our email distribution list, so that way you can be sent an email when these videos are uploaded. Within that email, you'll see any of the stocks in the S&P 500 that have given you an overbought or an oversold cluster signal. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. Lastly, we do have a presence on Facebook as well. Feel free to join us there. We have a group established at the web address you see embedded in that logo in front of you. All right, let's jump into our charts, and as you can see, I've got chart 4B pulled up here in front of us for those of you that are premium members that want to follow along at home with your own charting package. And as I mentioned in the intro, it was a pretty strong finish to the session here today. We were up 0.82% on the S&P 500. And as you look at this candle right here today, you can see we basically closed right on the high of the candle for the S&P 500, and it was much the same with the other indices as well. You can see we closed at the high on the Dow Jones, which was up just over 1%. We saw that the NASDAQ Composite closed near its highs as well. However, it underperformed today. It was down 0.59%. Remember, that's a theme we've been kind of tracking here recently as well, is it's not in your face, but we are seeing a little bit of slippage from some of those technology-oriented areas, at least compared to how they were the leadership coming out of the lows in March. We've seen kind of a rotation taking place. We're seeing more financial stocks going higher. I noticed that Discover Financial, that stock that we have those long call leaps on for this presentation, that had another great day today, along with a number of other credit card companies, banks, insurance companies, brokers. There's some money rotating into the financials right now. Maybe some of that money is coming away from some of the tech stocks. I did see that Zoom, the video company that has taken the world by storm in 2020 as a result of all of us stuck in our homes. Zoom was out with their earnings after hours tonight, and I believe they were down about 4% after hours. At least they were at one point. So giving back a little bit of those huge gains that they had along the way. Anyway, the Russell 2000, of course, is the small cap index. It was up 0.91% here today. Didn't quite close on its highs, but still good for an outperformance type of a day for it. As we look at the background colors of all of our charts, you can see they're all firmly in that dark green background color, which has been the case for a very long time. Right? If we look back at the S&P 500, our main index that we track, we went from a light green background color to a dark green background color way back here on April 13th. That's almost a couple of months ago at this point. And so the trend has been your friend. Had you been sticking to kind of the mindset of following the posture of the S&P 500 according to the market forecast, you'd have been in some decent shape there, as you would have been seeing consistent gains over the last month and a half during that time period. And as you can see, we're not all that far away from 3-month highs at this point. Right now, the 3-month high would take us back here to the 3rd of March on the S&P 500, and that was at about 31.36. And so, we're only about 60 points or so away from that where we stand right now in the S&P 500. So in other words, we've had a steady march higher. This is a great example of the saying that you hear thrown around a lot, that stocks climb the wall of worry. And there's been plenty of things to worry about in the last couple of months, yet stocks just kind of are marching to their own tune right now. And so we do maintain those strongly bullish postures across the board. Of course, all of our 30-day moving averages on all four of these charts are also green, telling us that price is above a rising moving average, and therefore the path of least resistance does continue to be to the upside for these securities. Let's go ahead and take a look at our 3 green arrows setup now. And that will be chart 4D for those of you following along at home. And as you can see here, we've got 3 green arrows across the board. So on this particular chart setup, if the background color of the chart is green over the current candle, today's candle, then that means that we do have 3 green arrows. And that is the case for all 4 of our charts right now. So it's been pretty consistent there. We did have one little hiccup there on the NASDAQ maybe a week or so ago where it kind of gave one of the arrows back there on the MACD histogram. Otherwise, we've had 3 green arrows on all 4 of these charts for the better part of the last, let's call it 2 to 3 weeks. So fairly strong trend trading environment that we find ourselves in right now. And of course, many of you that are premium members follow along with my top-down trend trading class that I host on Mondays. And I was happy to see that within the last week, we went to positive year-to-date gains in both my trend trading class and my dividend growth investing class. So we've been able to withstand the storm that 2020 has brought our way so far. We'll see what the rest of the year brings our way, but I am happy to see how my class has handled that extreme stress that the market has presented us with, and we just kind of dug in our heels and kept about our business and have been rewarded as a result. So if you're interested in trend trading, particularly with a top-down analysis layer on top of it, feel free to join me on my Monday class there for that type of activity. But right now, 3 green arrows across the board, so these are fairly good conditions for trend trading. Let's go ahead and dive into some 12 grid analysis now. Coming on over here to chart 5A, and this is our asset class 12 grid. So as we look at this, you can see here that we do have some pink charts on the board. So let's go through those first, since those are the ones that kind of stand out. And we have the long-term U.S. Treasuries here in kind of the middle rung to the left, and then we have the US dollar directly below it. Both of those charts are dark pink, telling us that we have a strongly bearish intermediate posture according to the market forecast. Both of them have a red moving average tip right now as well, which basically means that price is below a falling 30-day moving average in this particular case. Now, somewhat oddly, we do have a third pink chart on the board, and that's in the lower right-hand corner. This one is not dark pink, it's that light pink color, so that tells us this is just considered weakly bearish at this point. It's not a strongly bearish chart. It's just giving us a little bit of stress at this point. But what's odd about it is that usually you will find that TLT and TNX have opposite postures from one another, because when bonds go up, interest rates go down, and when interest rates go up, bonds go down. So this is a rare time where they're both bearish at this exact moment in time. However, there is a slight difference here in that you will find that the 30-day moving average tip on TNX is green, so interest rates are currently above a rising moving average. That's barely rising, but technically it is. So there is still a little bit of bullishness right there within the interest rate environment. We did close at 0.68% on the 10-year U.S. Treasury yield here today. In terms of some of these other charts, the one that really kind of stands out to me is what we're seeing there with emerging markets. Take a look at this 3-day rally out of EEM. That's a great move right there. They were kind of just meandering here a week or so ago, just mostly going sideways. But these last 3 days have been truly impressive there for EEM, which tacked on an additional 2.38% today. So remember, EEM tracks the emerging markets, so places like China, places like Brazil, places like India, Mexico. So there's some strong markets out there. We might investigate those here in just a moment, but just be aware that that was kind of the star of the day from the charting perspective, easily outperforming the developed foreign stocks and also easily outperforming the S&P 500 itself. Also, a chart that looks pretty good is high yield bonds. In fact, we've got two overbought cluster signals in a row the last 2 days on high yield bonds. That's how strong they've been. And remember, oftentimes high yield bonds, at least in the current era that we find ourselves, will react to what's happening with oil prices. And you will see down below when we look at USO, we had another pretty solid day for oil, up at least 3% there. Remember, the futures contracts will be a little bit different, but nonetheless, futures contracts I know are up today as well. So that's /CL, and we're probably on the rollover part of the day already, but you can see yesterday's candle was pretty strong right there. So anyway, the point is prices are above the moving averages on oil here after kind of giving traders a heart attack here a couple of months ago when it printed a negative price. All of a sudden, oil prices have come roaring back. It's given a little bit of a lifeline to some of those small and mid-sized oil companies that maybe were on the brink of bankruptcy. And it's those types of companies that need to raise capital in the junk bond market. And so that's why the high yield bonds have been improving here, because the prospects of the securities or the corporations that are raising that high yield debt are also improving with oil prices improving. In fact, for those of you that enjoy the conversation around energy stocks, if you are a premium member of Market Scholars, my dividend growth investing class today did concentrate on oil stocks. So if you're interested in that sector and that conversation, feel free to check out my recording, which is posted to our Trading Rooms calendar over at marketscholars.com. Gold had a down day, so be aware of that. It was actually kind of a pretty bad reversal. Now, you'll notice on the chart here, gold remains above a rising moving average. It remains with a strongly bullish posture, so we don't want to make too much of it, but gold was down 0.65% today, and that was a bearish engulfing candle. And, to be honest with you, I've been a little bit more disappointed in gold in the last week or two compared to where I was thinking we were heading back during this environment. And this is a chaotic world we're living in right now, where you would think that gold would be thriving, and we really just haven't seen that. So I don't know if it's just kind of losing some steam because it made such aggressive moves earlier in the year, or whether we're about to see a more significant reversal. So we'll do our best here during these presentations to keep you guys posted of what we see there. But you can see that GLD has really struggled with this level that it finds itself with here around $163 ever since the 14th of April. So we're going on, a month and a half of not really making too much progress there in the price of gold. Let's go ahead and advance over here now to our U.S. Sectors 12 grid, and this will be the traditional market cap weighted version of it. Remember, for those of you that are premium members, we have a new chart, which is 5R, which will look at this approach through an equal weighted basis. Anyway, as we look at these more well-known ETFs here, your XLFs and your XLCs, etc., you can see that we had a clean sweep today. All of our sectors not only have strongly bullish postures, according to the dark green background colors of these charts, but all of them were up today. So it was a pretty consistent day. We didn't see a lot of waves being made in the market today, but there was persistent and consistent strength from all parts of the market here today. So that was good to see. It just kind of gives you the impression that this march of stocks goes up based on the backs of the entire army, not just a few of the generals out front. For a while, that was kind of the complaint against the market, that, it's only Apple and Microsoft and Facebook and Google and those types of companies that were leading this market higher. You can't really make that argument right now. This is a market that is being led higher by the whole army. And, some folks might complain about that and say, well, it shouldn't be, and that's just the Fed, printing money and liquidity's coming into the system. system, and you can sit there and you can argue with it, or you can try to take advantage of it, right? That's the whole point of having these videos, is making sure that you're identifying trends and proper setups. And what we've seen has been bullishness the last couple of months. Whether the stocks deserve to be more richly valued today than they were a couple of months ago is besides the point. What is happening is stocks are going higher, and those who have taken that leap of faith by going to the long side of the market have mostly benefited. Now, obviously, there's always going to be exceptions to the rule, but this has actually been a very, very thorough march higher. In fact, some of you might have seen on Twitter here in the last couple of days, some information floating around. 96% of the stocks in the S&P 500 are trading above their 50-day moving averages. I mean, that is some very strong breadth there. Now, keep in mind that the breadth was quite weak in March and February, so we do have to keep that in the back of our mind as well. We're kind of dealing with very extreme moves within the market right now, but without a doubt, if you've taken that leap of faith to be on the bullish side of the market for the last couple of months, you have benefited from that leap of faith. And right now, you look at these charts, and you can see that every single one of these charts not only has a dark green background color telling you that we have a strongly bullish intermediate posture, but they all have green moving averages now as well. Remember, for a while there, a week or two ago, I was saying that that's kind of the thing that's holding the staples and the utilities back, and sometimes the REITs, was the fact that they were trading below their moving averages. Well, all of them have bounced in the last, call it, 2 weeks or so. And not only have they bounced from a price perspective, but that bounce has been strong enough to actually reverse the 30-day moving average to go higher. Remember, all moving averages are lagging indicators, and depending on how significant the move is, determines whether the moving average line can eventually turn around. So this was not just a move where these utilities and staples just barely went a little bit higher by maybe 1% or something like that. They were significant enough moves where they actually turned trends around. So right now, the path of least resistance continues to be to the upside with all these securities that you see here. In addition, I did want to quickly point out over here on Twitter, remember over the weekend after I produced the sector selector, I usually pin that to the top of my timeline. So again, for those of you that are not following, make sure you're doing so. My handle is @BrandonVanZ. And then once I do these market outlook related videos during the week, then I unpin the sector selector and then post the most recent video that I did to make it easy for you guys to go over and find it and click like for me there as well. But anyway, the reason I wanted to bring this up is just to show you what's been happening here from a sector perspective here recently. And you can see that we had a little bit of a slippage in technology, a little bit of a slippage in communications being replaced by healthcare up there at the top. We did see staples and utilities both make a little bit of a move on a week-over-week basis as well to kind of confirm what I showed you there a second ago with these moves off of those lows for the staples and the utilities. So heading in the right direction. The charts don't look quite as strong as some of those others. There's been other sectors that their trend has been more consistent, but these are more reversal types of plays that you've been seeing playing out here with some of those more defensive areas. But one thing I did want to point out there a second ago was that technology did slip from the top ranks, and my trade application example is going to come from the technology area here in just a little bit. And as I mentioned, the intro is going to be bearish. So, while we don't want to go overboard with that idea, at least we have some sort of evidence out there that suggests that technologies might be getting a little bit stretched, a little bit winded at this point, and maybe there are some bearish opportunities that you can take advantage of here and there. Let's go ahead and take a look at our global stocks here now, and this will be 5E. Try to get a sense of what's been going on, and I pointed out EEM, and I was wondering what's behind that move with EEM, and lo and behold, look at China. I mean, I remember it was I think a week ago or 2 weeks ago, somewhere within the last couple of weeks when I did this video, we looked at this particular 12 grid, and all of these were green except for one, and that one happened to be China. And at that time, there was a lot of talk about how, we might have additional tariffs, and these trade war rumors are coming, into our headlines once again. Well, all of a sudden, things change in a big way when we have our own protests and things going on here in the United States. And I hope you all are staying safe. Those are difficult moments out there for business owners, for sure. Obviously, it is, a very important message to send. I just hope that the protesters send it more peacefully and leave the property destruction behind, because that's criminal activity. So, there are some folks that are probably watching this that are business owners that might be affected, and if that is the case, I feel bad for you. I hope everything gets back together quick enough there for you. But anyway, point is, we weren't really expecting a big move out of China, because they had kind of stalled out there a couple weeks ago, and then all of a sudden they've just been shot out of a cannon here. And you can see FXI has gone straight up for 4 days. Not only has it gone up, but it's gone up at a very rapid clip. It was up another 1.8% today, so easily outperforming the U.S. market. But you'll notice that we took out a double top there. So that double top would have been on April 29th and on May 20th. And with today's move, we easily cleared up and over that. So there may be opportunities there with China. In fact, I remember one stock that I was going to bring to your attention was NetEase, NTES. I really like that bounce here recently off that rising moving average, but I was a little bit nervous that China itself wasn't behaving, so then I decided passing on that, and perhaps I shouldn't have. As you can see, NTES was up 2.78% and is hitting new multi-month highs here. Very strong trend with that particular security there as a result of Chinese stocks finally getting their act together here. So that goes a long ways to show us why the emerging markets have had such a great run of things in the last 3 days. It's a lot of it is China. In addition to that, you'll see down below that Brazil had a very nice day. Brazil was up 5.8%. Not sure what to make of that. I do know that Brazil had been struggling as a result of them kind of becoming one of the major epicenters of COVID-19. So maybe they are starting to see some positive trends and some positive news there from a health perspective in Brazil. But that was a really nice day out of Brazil. And of course, that's one of the other major components of the emerging markets. So the 5.8% move out of Brazil today certainly added to EEM's outperformance. You'll see that most of these charts do look pretty strong. So that's another point that I should make, is this is not just an American story that we are seeing. We are seeing strength across the globe. Again, there are people that believe markets should not be going up right now. Whether you're one of them or not, depends upon who you are. Depends upon your belief system. What we know with our own eyes and what we can see is that stock prices are going up, and it is not just some sort of a manipulation in one little tiny corner of a market. We're talking about all sectors. We're talking about nearly all countries. This is a global melt up that we are seeing here from an equities perspective. So lots of great charts here. It's hard to even pick one or two because most of these charts look really outstanding right now. When we want to look at the kind of secondary markets now, we'll take a look at some of those smaller economies, and that would be chart 5G. And from this perspective, it's kind of the same story. Clean sweep, dark green background colors across the board. Every single one of those charts has a green moving average. Path of least resistance continues to be to the upside. And a lot of really stellar performers out there. Here we saw Indonesia up 5% here today as one of the leading areas. We saw a big move out of Argentina as well. We talked about that one here in this presentation a week or two ago and seeing some of its outperformance, and it continued today. In fact, it was so strong today, it put in a rare overbought cluster signal. Argentina had really been getting hit in recent years, where you've seen plenty of oversold cluster signals, those little green dots, but it's been rare to find the little red dot there with the overbought cluster signals. So a lot of strength there in some of these areas of the globe. And again, you look at these charts, and you know, if you're honest with yourself and you're looking at these charts, you're seeing a lot of positive price action here. You know, whether you believe it or not is up to you. What you see with your own eyes appears to be quite strong out there. So great times if you're a bull in this particular market, regardless of where you reside and what sector you're focusing on. Mostly positive price action here in recent months. All right, so that brings us to our trade application example for the day, and I wanted to come on over here to chart 3A, and this will be our swing trading chart that I use for my my factor-based swing trading classes, and the next one of those will be tomorrow morning at 10 a.m. Eastern time. So I'll look forward to seeing many of you premium members there for that. But the stock I wanted to bring up is a very well-known stock, one that kind of has a very loyal following. So first of all, know that I'm not here to throw cold water on your parade. I don't care one way or another. I just simply look at the chart. So if we look at AMD, Advanced Micro Devices, this particular company, as I mentioned before, has a very loyal following. A lot of people really want to see this stock go up. I think part of that is because a few years back it used to be a single-digit stock, and a lot of folks loaded up the boat when it was a single-digit stock, and have been the cheerleaders of this stock going up 5 times in value over those years. Well, after a big push out of those lows in mid-March like the rest of the market had, you can see that AMD went all the way up from $36 all the way up here to $58 in basically a month's worth of time. Now, oddly, we haven't hit a high since then. That is fairly rare. Most technology companies are trading higher today than they were back on April 20th. This is a rare exception to that rule. Not only is the stock not hitting highs over that time period, but it actually is trading below a falling moving average right now as well. You'll see that this moving average color is red. Again, pretty rare in the technology space to find that. Most technology companies are holding up reasonably well. This one has actually tipped over to a point where the average price over the last 30 days is kind of dwindling lower and lower as time goes on. You can also see that the background color of the chart flipped from blue to light pink here today. So this is fairly timely from this perspective as well. What this particular chart is looking at is whether the blue near-term line is considered to be a bullish or bearish posture. So it had a little bit of a bullish posture here during this time as it rose back up to that moving average, but then these last couple of days it looks like it's really struggling to get up and through that moving average, and so prices have sold off. It was down today, again underperforming on at least a one-day basis here, as this stock was down and the rest of the market was up very nicely. So you've got a lot of things kind of working for your advantage there. You can also see that the intermediate line right now, the green line, it's not the focus of this particular chart, but for those of you that are looking at it from a trend perspective, even it has a bearish posture right now. Its green line is at 41 and falling at this point. So we would consider that to be a strongly bearish posture for the intermediate development system there as well. So a lot of different things lining up for a bearish trade here for those of you that think we're maybe have gone a little bit too far too fast in the general market, and it's good to have a little bit of balance in your portfolio where you have some bullish trades and some bearish trades. So let's go on over here to the trade tab, and I'll show you what I was thinking. We're going out to the July contracts at this point. These are the ones with 45 days left until expiration, and we're going to do what's known as a bear call spread. It is a credit spread where we take in money to start the trade, and basically we're trying to make a bet that a stock will not go above a certain price in the future. Now the strikes that I've chosen for this is the sold call will be the July 57.50, and the bought call will be the July $60 strike. The combination of those two things produces a credit of 71 cents. Now remember, we typically want to get at least a 30% return on risk when we do these types of credit spreads. So in order to check that, we're going to click confirm and send once. I'm going to get my calculator out here, and I'm going to take $71, which is the max profit on this trade, where we're just doing one contract here for educational purposes. So $71 divided by 179, which is the max loss of this setup. And that tells us that we have about a 39 or 40% return on risk for this trade. So it certainly fits our goals from that perspective. You'll also see that the break-even price for this particular trade is $58.21. So I'm going to go ahead and send this in, and then we'll come on over here to look at where $58.21 is. And it's about right here on the chart that I'm circling with my mouse. In other words, if you kind of track that with your eye, the crosshairs to the left, you'll see that there's basically only one day in the last several months where this stock has traded above that price, and that was on the high that it printed back there in the middle of April. So if you think that this stock will either go sideways, will continue to go down, or even if it goes up but just doesn't go up past that highest level that it had back in April, then this particular trade might very well be a successful one for you. All right, well, I want to thank you for joining me here yet again. Tomorrow we'll do our swing trading class in the morning, and then of course David's going to get his options inventory class going for those of you that are premium and plus members in the afternoon as well, and then we'll be back up to bat here for this market outlook presentation tomorrow afternoon. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.